Hello, everyone. Keenan and Denzel here again with the Winnipeg Market Watch podcast. Today, we are very excited to be reviewing the exciting data from March of 2025. Today is April the 12th. We're recording a little bit later because it is busy season. Denzel, we've obviously talked off camera a heck of a lot about the market and how the first quarter wrapped up. But before we dig into the data, as I always ask, what are your initial thoughts on where we're at and where we're headed right now?
Well, I definitely feel that we're in unprecedented times in terms of just kind of what's going on with our economy and as well as like the market here in Winnipeg. I do believe that there's some more room to go here in terms of price increases and just overall activity. We're starting to kind of reach what would likely be, on average, at least for as long as I've been in business, which is about 5 years, is kind of the peak of where we'll see prices with May around the corner. And obviously just with the insane gains that we've had since December already this year.
No,
Like I'm
no.
looking at I'm looking at the Substack article and just the chart that you put out, Keenan, and it's just almost like a straight line up from December 2024 to right now. And it looks a lot like the same increase that we saw in 2021. So yeah.
Yeah, that is a really cool point to bring up, and like we're obviously going to get into the numbers here in a second, but I've been using the analogy that it feels a lot like it's 2022 all over again in a lot of ways here in Winnipeg, and
Mhm.
we'll obviously break down exactly what that means, but this seems to actually be the only market as far as the big metro areas go Canada wide where this is the case. It Interestingly enough, some of our bigger markets are not really performing that well, and that's something that I think we're going to discuss here as well today. So let's talk about what actually happened. Last month, we had a benchmark price of $436,000. It was the new all-time high. We've broken it once again, this time with a month-over-month gain of nearly 4%. The Winnipeg benchmark price for March hit 452,300, bringing us up over 9% year to date and over 7% up from the 2024 high. And for those of you who are wondering, we're actually more than 5.5% above the May 2022 high. So, with this skyrocketing going on that Denzel already alluded to, as an operator and an investor in the field in Winnipeg, Denzel, when you see price action like this in the first quarter of the year, which, by the way, you fully expected to see as of our conversations late last year, what goes through your head as you're looking at new projects going forward into both the second and the third quarter of this year with prices as high as they are?
Well, for anything that's going to be sold in this quarter, I'm looking to just as quick as possible get these properties on the market and sold because like I just mentioned, with May and June kind of around the corner, we're going to reach kind of the highest point on average, over the past 3, 4 years that we'll see prices this year. Um, I would say for me, if this was 5 years ago, I'd be like, let's buy everything. This isn't ever going to stop. The prices are going to continue to go up for, the next 12 months without any slowdown. So now with all of the experience that I've had and kind of going through the correction in 2022, I am a lot more careful with the projects that I'm choosing for myself. I get tons of opportunities brought to me, whether that's through my own marketing or through agents and stuff like that. And so it's almost like we don't know what's going to happen in the summertime. We don't know how much supply is going to be available in the summertime. We don't know how much what's going to happen with the economy. We have our own election coming up, and that can affect things. And so one thing that I'm paying really close attention to and reminding myself is while we do have a COVID-like market right now, the mechanics of what's going on in the economy are nothing like what was going on during COVID, right? We had a pandemic, right? There was lockdowns, people were cooped up in their houses, but right now we're dealing with, Donald Trump doing his thing and making a mess of things, right? And so it's for us or for me, it's more about can I pick up a project that I know I could be done in 6 to 8 weeks with very low effort, and the decisions that I need to make for this property, can I do it so that I'm not having to think about major layout changes, dealing with a lot of permits with the city. So I'm looking for more of like the cosmetic renovations. Excuse me. I have a good example of a project that I recently just picked up in River Park South. The house is in great shape, uh, but it's a 2014 build. House like that really only needs you to do probably some paint, some flooring, uh, updating the light and plumbing fixtures, and then we're probably going to finish the basement. And this requires like no permits whatsoever, or maybe one or two. But point being is that I don't need to think and sit there of like, how am I going to make this house work? Right?
Mhm.
Where before, like 5 years ago, or sorry, three years ago, I'm picking up a 1910 property at this time of year with a May possession, and I'm having to blow a wall out, get a structural engineer involved, pull the building permit, move the electrical from out of that wall, and like just it's a lot more complex, right? And then now you multiply that by like five, six, seven projects, and you're going to sell into a market that you're not so sure about, So I mean, if someone told me, yeah, Denzel, with certainty that this is going to continue probably until like, I don't know, August, I'd be like, yeah, okay, we're buying anything because I mean, what's the comps anyway? Like there's houses that look like estate sales or, just very well maintained homes that are selling for what the ARV would be right now. And to me, that's like a clear signal that you have to be very careful with what you're buying because there's a lot of people out there who aren't really looking at the price anymore. They're just asking themselves, what's the cost of the money, right? They're like, okay, 450 house. Well, my pre-approval is 475. Talking to their agent, what do we write here? It's an offer date. They're like, well, you could pay 475. I'm saying it's probably not worth that much, but how bad do you need the house? Right? And can you afford another $100 on your mortgage? And they're like, yeah, probably. Like we'll find $100 somewhere, like underneath a rock or something. I don't know. And they just get it done. So for me, uh, to sum that up, right now I'm just trying to get all of the inventory I have on the market and be done by the end of June, done and sold. And then for anything that I'm picking up now with possessions, I'm really trying to be a conservative with what to expect in the fall.
And that is a lot of very valuable wisdom for those of you out there who are going to be doing any kind of projects related to real estate this year. So maybe play that back at some point next month if you guys get a chance, because there was actually a lot of depth to what Denzel just said. But I'd like to touch on one specific thing where Denzel said, if someone told me with certainty that the market would be a certain way in fall, I would behave differently. And that
Yeah.
actually is one thing that all markets internationally are lacking right now: certainty. With, of course, the very bizarre political and macroeconomic landscape related to the United States and their recent actions, there's been very volatile markets globally for the past 30 to maybe 45 days or so here. And interestingly enough, our real estate market has not only been steady, but increasing in value during this period of instability. So, like Denzel, I'm not sure what's going to happen next. Now, many of you might remember that earlier in the year, Denzel and I both laid out basically our month over month predictions for what pricing is going to be like at any point in the spring, summer, the fall, and into the winter. But I would tend to agree with Denzel that in a situation like this where it isn't totally clear what's going to happen, don't expect that we're going to continue to have 90-day windows where we're going up 9 to 10% for the rest of the year here. In fact, while I do still believe we will hit 472 this year as a benchmark price, I don't think we're necessarily going to go to 500 this year. I could be totally wrong, by the way. This is just my best guess. And as I've said many times, I believe the benchmark price in Winnipeg is somewhat tied to the ability of home builders to put up desirable, reasonable product in the same kind of price range that would make an existing construction purchaser stop and think. And I think that that number is around 475 or 500 right now. That could change dramatically, for better or for worse. So,
Yeah.
um, that's our risk discussion here. So one thing that we didn't necessarily talk about through all of that, Denzel, was the upcoming Bank of Canada announcement, which is set to actually occur in 4 days on April the
Yeah.
16th. It's widely speculated at this point that the Bank of Canada will probably hold. However, given the near hourly developments in our global markets and the fact that one tweet can change the direction of society in general, what are you thinking about when it comes to this April 16th announcement? And what do you see happening into the summer as it pertains to interest rates? And more importantly, what does it mean for your business?
Well, I think with where the rates are right now, there's clearly a lot of positive sentiment about, the market here in Winnipeg. So if the Bank of Canada decides to hold the rates where they are, I think that it's pretty clear as to like what's going to happen from now until the end of June. I know that there's a few more meetings this year to see kind of where the interest rate goes. Obviously, I think in the past few meetings with the Bank of Canada, they've done what they said they were going to do. So, I mean, it's, or at least kind of where they're headed. So, for me to go and say, well, I think they're going to just lie this time or change their mind, I'm just going to go with whatever's being said and make decisions on that because it's the information that we have, right? And to make a guess as to like what's going to happen just because I feel that way today and I'm bullish on the rates. I don't know, man. But yeah, so for me personally, I think that they'll likely hold the rates, and if that does happen, all that's going to do is confirm to buyers that could still be on the sidelines or sellers that okay, yeah, the rates at a good spot right now. This is obviously a market that I should probably participate in and jump in. Um, at least, I mean, obviously, my my thought and my opinion is obviously seller biased because I sell a lot, right? So I'm thinking, yeah, like I'm thinking about right now, I wonder what my place is worth, like the house that I'm in. I wonder if someone would buy it. I mean, me and Keenan just recently listed a property in what would be considered somewhat of like a core area. And we've had one showing and an agent actually indicated that they were going to write. Now we didn't actually end up getting that offer, but like I should also add, we are priced quite high for that property for the area. But like that is also like a signal of like how many times can you show like you show what's the chances of you listing a property, you show it once and then you get an offer.
It doesn't happen a lot.
It doesn't happen a lot, right? And it's like, okay, so that tells me something because I remember listing a house in an area similar to that. I think it was the end of 2023 2024. I'm talking about Beverly and Sherburne Keenan. They were tenant occupied at the time. Like, well,
Yeah.
Beverly wasn't, but we went 60 days on market with no offer and tons of showings, right? Or people were wanting and looking at them. So I
Mhm.
don't know. It's a really interesting market, and I think if for the landlords out there, if you've ever thought about unloading some of those rental properties and kind of deleveraging and repositioning your portfolio to take advantage of when there might be the next dip, like right now is like the time, I would say.
I I would agree. And as somebody that has a lot of tenant occupied properties on the market, it's been actually somewhat surprising to me that many of the showings are not new landlords looking to acquire the building to keep the tenants. Most of the activity is actually related to possible occupants of the property wanting to buy it, evict the tenant, and move in. And
Yeah.
this is happening on homes that I didn't think it would happen on. Like actually very profitable rentals that for whatever circumstance the seller happens to be in, they've chosen to list it with the tenant they need out, or they're needing money, or their portfolio must be sold off for one reason or the other. And we're expecting another investor to come and pick it up because it's priced right and the property makes money. But the investors out there lately, I'm finding, aren't looking for that. It's very different than we saw in 2021, where everybody wanted to accumulate tenanted rentals. Lately, what I'm seeing is even in the residential, like buy and live in market, is everybody's on a hunt for instant equity. They don't want a top of the line cash flowing rental. They want something with lift that they can improve, pick their own tenant, put it in there, and capture equity rather than spend a large amount to get something turnkey. And I'd say that is probably the most significant difference between this market in 2021 and especially this market and what we saw about, I'm going to say, 10-ish years ago, like mid 2010s, where the name of the game was make your house as nice as possible and sell, because it was the only way to win back in that market. When you could put 19 or 18 pictures on MLS or whatever it was, the quality was all awful, and the listing videos were like the do 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 and like the slow pan across the screen, and back in those back in that era. Not trying to make fun. Like I respect the OGs, and I know they're not in that era, but you get what I mean, right? Like that.
Yeah.
The game has changed, and at this point, I have been blown away by the requests of home buyers coming in and looking at this stuff, and the agents calling me, how can I get the tenant out? How can I get the tenant out? And I go, man, like, why don't they just buy it with the tenant and then evict them at the end of the lease? And the agent goes, you don't understand, Keenan. There's a housing crisis here. I was in multiple offers last night. There were 22 offers on this house. It went 135 grand over. My people were pre-approved for 100K over. We broke clean. I didn't even get a call back. You know what I mean? And so, like, I have to hear this, right? Like, obviously, I'm on both sides of it too. Like, I get those declined texts and calls from the agents, and it's like, hey, yeah, thanks. Like, congrats to you and your seller. And then when I make them, like, realtors are crying. And they're like, I can't believe you lost. And I have to say, I'm sorry. There's nothing I can do. Like, write cleaner or write higher. I don't know.
Yeah. Oh, sorry. Go ahead, Keenan.
No. You continue. I was just gonna apologize to our listeners if I got a little crazy there. It's a high energy morning, spring market. The blood's pumping. It's April.
Yeah.
We're rolling. Like, it's showtime.
Yeah. You know what? I just want to make a comment. So back in 20, this is something that I've remembered while I started to kind of reposition myself to be where I am today in my business. There's an investor out in Ontario, and he said to me, he's been in the business for like 10 or 15 years, and he works out of London. And he said to me that the market, this is before I was like really locked into what was going on. He said to me, he said, the market's really frothy, Denzel, right now. You should be very careful. And at the time, I just dismissed it. I was like, man, what does this guy know? He's not from Winnipeg. Like, who cares, right? Sure enough, 3 months later, the market turned for the worst, right? And so, for people out there, like you've mentioned, there's actually homeowners looking to buy these tenant occupied properties. Again, another signal that just like, okay, we should probably think about that for a little bit more, right? Why is that happening? And is that an indication that we're probably like a very volatile market? This could change very drastically, with new government in the next couple months, right? Like all it takes is some weird policy changing a stress test or something like that, making affordability a little bit more challenging. And then all of a sudden it's like, shoot, you got like 5, 6 houses that you're like trying to move and you can't get those ARVs anymore. So I just can't say it enough that like I feel like I've been here before, and I feel like I have this newfound wisdom now that this is like my second go around. And I'm like, yeah, I just couldn't be any more just I couldn't preach that anymore. I just don't want to see anybody lose their shirt right now, especially if you're just getting into it. What's a lot different though in this market, Keenan? A lot of the education programs, actually, I would even say nationwide, aren't really that prominent as they were 3 years ago.
That is true, actually.
Like when it comes to the real estate education, like before, in the late 2010s, there was Black Card that was pretty prominent. There was in Winnipeg, there was Teammade Real Estate. There was I think there was Go Get It Real Estate. There was a ton of other coaching companies out there, Manitoba, that were really taking advantage of this new, like the popularity around investing in real estate,
Right,
right?
because
And then,
ultimately
and then
real estate investing only became popular following 2008 in a really mainstream way. So that whole thing was
yes,
new back then too, right?
yes. And social media just blew that up and made it so much easier to advertise and market, right?
Mhm.
Now that that time has come and gone, I think there's still a lot of people who are licking their wounds from, the correction a few years ago. So now it's like, well, at least the way I feel is when I'm kind of out there in the market looking for a deal or talking to people and stuff like that, there's not a lot of people who are doing it at a super high level. They'll buy the one odd house, they'll do whatever they do with it, whether it's a rental property or a flip. And I feel like it's good and it's bad, I guess you can say. I know it's probably more good for me.
For
But
you, yeah, it's certainly good to be
yeah,
the
it's
big
great for
fish in the
me.
pond that everyone else left, you know?
Yeah, exactly. And then it makes it so that the deals that I'm seeing, I might have not gotten those opportunities, a couple of years ago.
Right. And that's something I've really taken note of is in the past, especially during the pandemic era, but it was definitely prominent before the pandemic too. Don't get me wrong, but the amount of the coaching and the real estate education out there, or especially on a paid basis, is really hard to come by. And I haven't seen it nearly as much as I did 3 years ago, let's call it. In fact, I'm not even sure which of some of these organizations that would have been really big leading up to the pandemic are still operating. Maybe they are. I'm honestly not sure, but it's been a while since I've gotten a call from a recent high school graduate saying, like, I'm going to hold my phone and just like pretend I'm reading a script. Hello, Keenan Brown. I am interested in purchasing a property for 50 to 60 cents on the dollar from the ARV. Do you have anything available? And I have to go, okay, who wrote that script? All right, just stop. Just talk
Yeah.
to me. What do you actually want?
Yeah.
I haven't gotten
I
one of
actually
those in like
spoke,
a year.
yeah, I spoke to another agent and they said the same thing. That I haven't gotten a call for a deal in a long time from an investor. It's been about, a good 6, 7 months.
Mm-hmm.
She goes, actually, the last person that ever called me about stuff like that was you. I was like, wow, that's actually pretty interesting because, most of the guys that are in the investment space here that are flipping houses, doing wholesales and stuff like that, we all kind of know each other, right?
Mm-hmm.
And, it's starting to become where it's the information that we have is so specialized that like when we have a new person come in or that we see like I'm walking down the street and I'm putting flyers in the mailboxes and I pull this letter out, I'm like, who's this? Right?
Mm-hmm.
And then I'll like send it to a group chat that I'm in with a bunch of the investment guys. Be like, does anybody know this guy? And they're like, nah, he'll probably quit in the next month because he'll realize that it's not that easy to like find stuff, right?
Of course.
So it's interesting to see how times have changed a little bit with the investors. At least the rookie investors are definitely not as prevalent. Um, but yeah, I mean, crazy times that we're in with the market for sure.
There's no doubt about it. And I wanted to just talk about how things are so different here than they are across Canada. I know I touched on it earlier, but I recently went to an RBC hosted event where they talked about real estate markets nationally. And my own research that I did in advance of going to this event basically said that as far as our big markets are concerned, like Toronto and Vancouver are down anywhere between 25 and probably 10-ish% from their all-time high, depending on what specific metric you want to use, price-wise, I mean. So the more interesting thing is supply, especially in the condo sector, is now at multi-generational highs. There appears to be no reprieve. The interest rate reductions don't seem to be juicing the market upwards. And those places are still sitting either stable or down from last year, and it's now April. The exceptions to this are the smaller markets, particularly in the prairies, looking specifically at Saskatchewan, Manitoba, and Alberta as provinces that have done relatively well. I don't know that anybody would have predicted Winnipeg detached real estate to be the asset class that would be the high performer after 90 days into 2025. But I wanted to just hear your thoughts on, first of all, what's going on in the bigger markets, Denzel, and then second of all, when you see Winnipeg performing so well and some of those bigger markets performing so poorly, does that give you hope or does that make you afraid?
Well, I definitely it definitely makes me feel more optimistic about how good our market looks in comparison to the two, right? You think about
Yeah,
Vancouver and Toronto, and it's like, man, you need to be making some big money to go out and buy out there, right? Like a $600,000 condo in Toronto gets you you know, a 2,500 square foot property that, you know, is a little bit dated but still really big in a nice area here in Winnipeg.
it's true.
So, you know, I just think that the value proposition that Winnipeg has always been a lot better than what you could get anywhere else in the country. Um, and I do think that, and you commented, we spoke about this off camera just most recently. Actually, sorry, I'll bring this up. We had a property in Bridgewater for sale this week, and I think what was it? Two of the offers were from out of town. Is that right?
Yeah, actually, that's the
Yeah,
crazy thing that the high bids are often not Winnipeg based.
yeah. So having said that, you know, like a guy who's from let's just say they're from Ontario and they come and they look at this house and and they're like, wow, you mean I can buy that for 600 grand? Like that place is like 125 more here in wherever I am, you
Mm-hmm.
know, and there's no chance that I'm going to be able to get that. So, you know, we get these people from other provinces and stuff coming to look at the real estate that we have here in Winnipeg, and they're like, okay, yeah, like, and they don't even care. It's not going to change their life. Like 100 grand isn't going to really hinder their finances much. It's just like a regular thing, right? It's actually a great deal to them, probably. They're like, holy smokes, right? Um,
Mm-hmm.
and so, you know, I think while we have this rate environment, as long as the supply is tight and as long as the affordability continues to improve, I think that we're going to see more and more of that actually of price decreases in the bigger area in the bigger markets and price increases in the places in Canada that are more affordable. You know, we talk about Regina, Saskatchewan. Like I don't know if you've even looked into it, Keenan, but I was spending some time just the other day, just curious, looking at kind of um, what prices are exclusive of Alberta because I know that that market is actually going has been hot for a long time, but
Mm-hmm.
Regina specifically, like it's cheap out there. Like if you want a
It
nice
is.
place, like you can certainly get good value, but you're in Regina.
Right.
But I mean, I don't know. Someone might say the same thing about Winnipeg, who's not from here, right?
That is
So,
true. And while I get the analogy, like Winnipeg in the greater area, if you include some of the most immediate neighborhoods like Headingley, East St. Paul, West St. Paul, etc., like the greater Winnipeg area is at or approaching a million right now. And
wow.
we have a lot of stuff to offer for a city of that size. It certainly isn't a city of 300K like Regina. Actually, Regina might be at 500 now. Don't really keep track,
Yeah.
but it's you know what I mean? Like we are significantly bigger. We're just not huge. Like Toronto, the Toronto area has 7 million people. You
Yeah.
know, like that's 7 Winnipegs in a lesser land mass area.
Yeah.
That just means that things are different. Like if we were, you know, Winnipeg as a city, like the by standard boundaries, takes up as much room as Montreal, and we have less than a third of the people in that same
Yeah.
amount of space. So even if we increased our density 3 times, imagine that would how that would work in this city. It would be chaos. It would be pandemonium. I would even go so far to say,
Yeah.
because we're already like looking at the supply numbers, we already have a supply problem. And that's part of why, at least in RBC's opinion, the projected GDP growth for the next several years in Winnipeg, alongside the already very tight supply situation with no real meaningful answer, is likely going to drive prices up in the long term. The question is just, is anybody going to have money for the down payment next year? And
Yeah.
that's what's in my head. I don't know about you, but I know I'm feeling the effects of the decreased supply of listings, especially compared to recent years.
Yeah. Yeah.
I'll also
Yeah.
add,
Sorry, I'm just gonna comment on that, Keenan. Yeah,
yeah,
it's almost like every week there's new inventory that comes to market with an offer date. And so everyone has to wait to buy these houses, right? And it's
mm-hmm,
like it's not going to change the supply picture because all of those houses get bought right excuse me, get bought right now. 5 houses come to market, 5 houses sell the week after. 2 houses come to market, 2 houses sell the week after. So you're just basically like treading this like line where it's like, okay, guys, we're not really getting any better here. So I mean, we had 3 offers in Bridgewater. Well, 2 people still didn't get a house.
mm-hmm,
So they're gonna go and write on something else that just got listed, right?
yeah, exactly.
Talking to another agent who just recently sold a property where we have some houses available in the West End. You know, there was 7 offers. Well, 6 people still didn't get the house.
Mm-hmm.
I don't know where the offers were, but if they're looking at area, well, now there's only 2 houses to buy, and it's likely going to be a bidding war for the next 2, right? So
You would
yeah,
think.
I mean, you would think. Um, this is why the summer gets interesting because the listings start to pile up a little bit on like on average because people aren't exactly thinking about buying in the summer because they're busy with weddings, with family vacations to the lake or wherever. Um, just they got a lot of stuff going on in the summer. They're trying to enjoy their time away from work, and that's when you start to see like some listings that likely should have got a lot more money miss offers, and then the really savvy buyers and those agents who kind of recognize that trend swoop in and they pick it up for less than likely price that they were expecting.
And that's, you know, it all comes back down to the whole, when buyer demand has been propped up by rates falling and a bunch of people effectively having their savings bolstered by good markets in other places for such a long time, combined with the fact that there really just isn't much to buy, these bidding wars just happen. And last month, as you could probably see in the article, this is the first time in a long time that we've had more homes sell over list than under. And I
Mhm.
truly don't think that that is an effect of pricing strategy necessarily. It of course sometimes is, but there's a lot of houses out there that are not necessarily priced in such a way that they are fishing for 100K more. They might be fishing for 30 to 50 more, who knows, but they're still selling for 100K more. Or they're priced at a number that last year would have been considered outrageous and they're selling anyway. Even if it's like asking price, they're still getting a deal done. And when I see that, that really just shows me the urgency here, because apparently, beyond what I expected, there's a lot of people that are capable of buying property at yesterday's prices. The issue is so many of those people have already, given the current events, been priced out of that. So
Yeah.
what do? Well, you either tell them to rent or you tell them to find a condo and then just see how that goes. And most of them really don't want a condo. But even that
Yeah.
market's heating up too. Like condos are selling really well right now, really easily, actually, for good prices too. It's been a long time since we've had action in that market, and that's reminiscent of 2022, I will say. By the way, listeners out there, if you want to hear more about condos, you guys know I have lots of condominium opinions. Uh, please let me know, because I purposely don't talk about them in these market reports because I assume no one cares. But if you care, I'd like to know. So please, if you're listening right now, reach out and tell me I care about condos. Leave that in the comments below. But anyway, Denzel, is there any specific area that you really got your eyes on, or did anything really, cross your desk and make you go, "Ooh, that area! I can't believe the action we're seeing there over this last little period we've had."
Well, I think that I think it's safe to say that pretty much the entire city is on fire. Um, that there are opportunities in every neighborhood to have a good outcome depending on how you price. I think that pricing is super important right now, regardless of kind of where you are. Um, so for me, I think about it and what neighborhoods am I really impressed about right now? And it's probably Westwood. I mean, if I could find anything in Westwood, that's probably where like I'm like, okay, I'm buying that. Because
Right.
and I've been following Westwood for probably since Allard, so call it 2 years now. Um, and that area has always been so tight. Like there's only ever been I've never seen more than 10 listings available in Westwood, first off.
Yeah.
And everything has an offer date, and almost unless it's crooked, it sells. Maybe not for the list price, but it goes. So in terms of the saleability in an area like that, that's probably, I would say, my number one, because the upside there is just people go crazy over that area. I don't know what it is. I mean, actually, I do. It's really nice over there. It's a lot of big bungalows, a lot of 1950s, 1960s construction out there. So I can see why people like it. It's got the right sizes, 12, 1,300 square foot bungalows. I can see why people like it. And it's not so far west that you're all the way in Charleswood. It's kind of like in between. And it's a great area. And so I would probably say that's like my number one area. And then of course anything that I can find in like St. Vital, whether
Mhm.
that's River Park South or um, Meadowwood, the 2D area, 2F, like
Two
that's
E
all
three,
something.
two E
Exactly.
three,
That's all.
basically. Yeah.
Yeah, that's
Yeah.
that's that's what I'm kind of like really excited about. I know that the demand is super high there.
And it has been for a while. So I'm a big fan of those areas as well. And I've said for years that some of Winnipeg's most underpriced real estate is those areas that feature like the gold standard kind of housing, like 50s, 60s, 70s construction, primarily bungalows, solid built, 3 bedrooms, 1 or 2 bathrooms, maybe a garage, maybe not. Anything that is fundamentally comprised of that kind of property, especially if it's in a generally regarded as safe area, has consistently been among the best performers citywide, maybe ever. Now, I'm going to add something that I found very interesting. Last year, the northwest section of Winnipeg, excluding Garden City, speaking specifically about the Tyndall Parks, the Maples, the Inkster Gardens areas, all had very mediocre years. And this year, while much of the city is up 10% or more, that entire section is basically flat. It might be up a couple points, but the market hasn't moved there in terms of price as it has elsewhere. And I'm wondering today if you were offered a deal in an area like, say, any of the Tyndall Park streets, or specifically the Inkster Gardens areas, maybe even just the Maples in general. What are your thoughts as it pertains to market movements and pricing in those kind of circumstances where the gains haven't been as big?
Well, for areas like that, it always comes down to like what we can buy it at, right? Like if I'm picking it up for, 50% off and the numbers work out, then we're buying. Um, I'm not shying away from areas that don't obviously have the same price growth as an area like Westwood, but in terms of that's kind of when I start to look at the absorption rate then, because although the maybe people aren't going 30, 40, 50, 60K over, right? But it's again 7 days on market and it sells, or days to sell is like less than 5 days. yeah, we're going there because we know that once we actually complete that project, we're not going to have any trouble selling this thing, provided we have the right value proposition, excuse me,
Mhm.
and we price it right. So, I mean, recently we bought another property in the Maples, and we know that the Maples is really hot. The demographic over there um, is hungry for property that's not priced absurdly and off. And so, I just think that areas like that we're not shying away from. We're definitely interested in going there as long as the numbers work.
And that's the typical investor answer. We'll do it as long as the numbers work. You'll love to see it. Um, I guess closing thoughts here. I just wanted to express to everyone right now that I think there is some really prime opportunities for those of you with a long-term mind for the real estate game to pick up certain classes of property that I think have been overlooked or are probably priced in such a manner that there's a lot of value to be had. And I wanted to call out specifically some of the infill multifamily duplexes that have been put up in some of the better areas from 2020 till 2023. And I'm calling those out because the prices are not moving right now with the rest of the area. And a lot of the people that built them and held on to them are going to be willing to sell them for a lot less than it actually cost them to put up. So if you're seeking an income property, I think that those are a very good thing to be looking at this point with the rest of the market having risen so much. But I'd also like to say, if you are able to wait, if you have the luxury of time and you are a buyer in this tight market, purchasing a tenant occupied property and dealing with a realtor who understands the eviction process can be a way to get a house for an outrageous discount at minimal risk. All you need to do is make sure you've got 20% because CMHC won't let you own it as a rental at 5% down, or less than 20, I should say. But if you can do that and you want an excellent price and you're willing to wait, you can really, really do well on some of these. So wanted to call those out because those are the opportunities that I'm seeing in the market that could be really good buys. And a lot of these people, like, the stuff's sitting because it's tenanted and people apparently aren't jumping on tenant occupied stuff right now. But basically everything that isn't tenant occupied and can be moved into by a homeowner, as I think you've taken away from this episode, it's complete chaos. It's pandemonium. That's the word of this episode. I'm probably going to put pandemonium in the title. Yeah.
Yeah.
But Denzel, any cool or unique opportunities that you're seeing generally in this market, or any asset class or type of property that you're feeling is overlooked?
Um, well, I think more so what I'm seeing is that there is so at the end of 2022, it was tough to buy because the buyer psychology, or sorry, seller psychology was didn't catch up yet with the market.
Mm-hmm.
Prices were falling, sellers were still stuck on their price, and so the deals weren't um as frequent. And so what I'm seeing now is the exact opposite. For guys like us or anyone who's paying close attention to what's happening, if you happen to get an opportunity to get in front of a seller, like, people still think the market sucks, right?
Mm-hmm.
Not everyone is like, wow, this is great. Unless you're a realtor and you're watching, Matrix every single day and seeing these insane prices, and you're just an average person, you have no idea what's going on with real estate right now. The last you heard about real estate was the interest rates are high, and so the prices are falling, right? I get that question so often right now. Hey, how's business? I heard the rates are high right now. I'm like, oh yeah, they are high, but I mean, like, apparently it's not stopping people from buying houses. So I think the psychology hasn't caught up yet with the sellers, because we're getting all of this new data that we've never seen before of, like, what these properties are worth. And the savvy buyer who is on top of where the market is and what it's doing is able to write an offer and take advantage of the opportunity of the upside, in the next 3 months. Um, a good example is kind of some of the deals that we recently just put under contract. We have another house on Simcoe, actually, where when we priced it out, we were like, yeah, maybe it's only like a 210 house when we're done. But I'm looking at it now and I'm like, well, where else do you go for 200 grand? Because it's usually going to need work, right? So I'm looking at the comps now. I'm like, well, this is probably like a 225 house now, 230 maybe, right? Um, so yeah, that's probably all I would want to leave the listeners with is just that if you are an investor and you're looking to take advantage kind of where the market is, use this podcast, use Keenan's Substack articles to help guide you in your decision making, because the better you can stay with an ear close to the ground as to what's happening, the the better decisions you'll be able to make, and the moves can be awesome for whatever timelines you have in your investment journey.
And that's great advice. And making good decisions leads to making more money. So
Yeah, let's not forget.
that's the name of the game. We don't sit on this podcast and we don't go out there and do what we do and take the risks we take and handle the things that we have to handle because we just feel like it. We do it because we want to make money. That's real estate. Everybody's here for that reason. And you know what? I will say it's satisfying to help happy families end up in a new home and like to make a successful move. And I genuinely do care about you guys, like especially if you've worked with me. I want you to know, and I'm sure you feel it already, that I actually do really care about you, and I'm being serious. But that being said, it's a lot of work. And if there was no money in the game, most people wouldn't do it. So I can fall into that camp too. But I do care. I hope you know. Otherwise, I wouldn't bother sitting on this podcast and writing the articles as well. But I guess last final thing here for you, Denzel. Any major listings coming up in the next week, or any properties that you're hoping for a big outcome on in your portfolio?
Well, we have 2 rentals on the market right now. I have another 2 rentals that I hope to have complete in the next 2 weeks, roughly. Really excited to see kind of these properties come to market, because I know that the buyer activity is just insane out there for anything 250 and under, and that's where these prices are, or where these listings are going to be priced at. And then we just actually, at the start of this month, got possession of 2 new flip projects. One in River Park South, and the other one is actually in, I think it would be Fort Garry, West Fort Garry. And really excited to see how those have done, because I've been watching more so the Fort Garry area, and like any bungalow that goes up for sale in that neighborhood. When I originally got the ARV for that back in December, we were looking at like 450, 460. It's like 500 grand now. So just by doing a good job, yeah, like $40,000 more, like it makes sense, right? We're up what, 10% now, Keenan, from
Pretty
December
close.
almost.
Yeah.
And that makes sense, right? So 450 and another 10 points to that. Yeah, we're at like 500,000 now for a 450K house back in November, December, which is crazy. But that's real estate for you, I guess.
It sure is. So, guys, we're going to keep this one short and sweet. Sorry for the delay in getting this episode out. We'll be back in May. We will have a guest next month, and we very well are approaching one of the months where we could possibly be at the peak, but who knows? We're never going to speak too soon. But thanks again for listening, and we are looking forward to seeing you guys in the next one.